sharing how to create and grow income streams and manage, multiply, and protect your wealth in the new economy. Are you tired of trading your time for money? Do you desire freedom today instead of retirement in 10, 20, or 30 years? I'm MC Laubscher, and this is the Cashflow Ninja. Hello, Cashflow Ninjas. MC Laubscher here, and welcome to another episode of the Cashflow Ninja. I've got a great show for you today. In today's show, we're going to look at merchant cash advance cash flow, and I'm joined today by Bill Bromley. Bill is the president and CEO of Capital Source 2000. Bill, welcome to the show.
MC, thanks an awful lot. I'm excited to have a chance to talk to some of your people, and this is a business that I think is exciting, and hope to be able to share that with a lot of your current investors and current listeners.
Absolutely. The first time I came across this business and started just educating myself on it and preparing a little bit for our interview today, I was just kind of blown away. So I'm super excited to be sharing this with our listeners and viewers, merchant cash advance business and cash flow. But before we get into that, Bill, can you please share a little bit about your background and journey with my listeners?
Sure. So I am a lifetime banker. Local guy in the Philadelphia market, so I have been operating in that market for a long time. I went to college there, went to graduate school, MBA, that kind of thing, but started working for big banks. But really, I think there's an entrepreneur piece that I have always felt was important. And then after working at larger banks at about, I was 36 years old, I started a bank in the Philadelphia region with investors. I went out and raised $7 million and really went into my own business, but it was banking. But small businesses and small banks strictly do lending to companies. That's where the opportunity is, and so that's what I've done. I was introduced to a fella in this business who is now my partner about 5 years ago, and is a banker for 30 years running banks. I had no idea that this niche exists, and it took me months. I looked at it for 4 months to find out if it's real, because in banking, you lend money at 6%, you have a cost of funds of 2%, and you're working on 4 points maybe. In this business, it's totally different, but it's about expanding businesses, and it's high rate but high return.
Yeah, absolutely. Well, share, if you don't mind sharing with my listeners and viewers what exactly it is, how it works, and then also what is the problem that it's solving for the marketplace too, because it really solves a very big challenge or problem for a lot of business owners.
Yes. So as I was trying to understand this business, I was talking to a partner, and he said no. We said we put money out. It's venture capital money, but it's for expansion. And the first and most important piece to remember in this is that these are not companies that are struggling. These are companies that are doing very well. They have lots of cash flow, and we measure cash flow in a little different way than I have for 30 years as a banker, because we look at their checking account and what flows through their checking account on a monthly and annual basis. And that's really how we underwrite. But the opportunity is that these businesses are always looking for, the good ones are looking for a second location, a third location, but they invariably need capital to do it. And while the cash flow in their business is strong, these people don't usually have real estate or hard collateral, which banks like, and they're not that interested in taking on new locations or new parts of an existing business. So when you have even a pizza parlor who decides that if he could put a deck on the back of his pizza shop, he might be able to put 30 tables out there. He might be able to seat, at lunchtime, maybe 100 more meals, and he needs $100,000 to do it. So that's our ideal kind of a deal. We will do that deal. We'll do it in 2 days, because when small businesses want money, they need it quickly, not 90 days like a bank does. So we can analyze it, we can underwrite it, and we can close it within 2 days and disperse the money to him. And what we're looking at is his current business cash flow, the money through their checking account statement, and an anticipated cash flow coming from these new tables that he's going to put outside. So he may take, 2 months to build the deck on, put the tables in place or whatever. And our underwriting which is because our money's expensive. It's about 35%. It's a 1.35 factor rate for the period of the loan. But the point that's very important is that it's very short term. It's only 6 months. So you look at the total cost, not the 35%, which is daunting. And the way we underwrite is to say, look, what is this guy going to do with our money that he can make more money than it's going to cost him to borrow it from us? And that's basically a very small example of how the business operates.
The 1% grow their business and investments every year, regardless of the economy and marketplace, and pay very little or no taxes legally. Besides having the right mindset, elite strategies and tactics, and the counsel of elite wealth advisors, coaches, and mentors, they have access to opportunities that the rest of the population do not. If you're an accredited investor, we have a network that provides Cashflow Ninja listeners access to exclusive business and investment opportunities. To join our investors network, please apply at cashflowninjainvestorsnetwork.com. That's cashflowninjainvestorsnetwork.com. So for listeners and viewers, just to put it into perspective too, like Bill already did, but just to reiterate some of it, is business owners are, there's different types of businesses, and there's different needs for money for businesses, right? You need money to expand, as Bill mentioned. You need money to grow the business. And then sometimes there's even seasonal businesses, right? Where, let's just say, there's businesses that do a lot of sales during the holiday period that needs capital, but they don't have capital. They know that it's there. They're going to come into that money. But, it's the chicken or the egg. You have to get the money to get all the product and inventory to be able to sell that, and then you're going to make more money. But there's a bridge that this niche is providing in a time. How can I say? There's a gap that it's filling for business owners that need capital on the short term, and it's secured, collateralized by the receivables, right? The cash flow of the business, not the hard assets, because that's why they can't get, a business loan, as you mentioned, because most of them don't have hard assets, or maybe they have it, but they need capital in the short term, right? Immediately, not 2, 3, or 4 months, or however long it takes to close the business loan.
Yeah, if I could give you another example, that would be, it's a very different type of other than what I just said, but I got a call from one of my banker friends who had a ready-mix cement company that did $10 million a year, had 3 locations, 56 cement trucks owned free and clear, called their bank and said, we just got an order from one of the largest developers in the area, and we need to increase our line of credit because we already have our line is heavily drawn, building on supplies for the spring, and now we've got this large contract. Can you help us? Oh, bank, sure. We'd be glad to help you because you're a very good customer. You've got all these assets. So the question is, okay, we would like to have $600,000 by Monday. And the bank goes, wait a minute. We have to get an appraisal. We have to go check out the latest financials on your company. But then we would be glad to give you a line. So the owner, the woman called me and explained her need. And I talked to her about how we would do it, what we would do, and we absolutely could do this deal, and we would have the money in her account on Monday, but it would be at 35% for the period of time the money is out. And she was, she really choked on that a little bit, but she said, you know what? I said, let me explain where I think we could look at this. I understand that you need to increase your line, and you need that money immediately because you've got to execute contracts. Let's talk about how much money you might be able to make from the contracts, because this money is going to cost her, say, $135,000. How much can you make from the contracts? Well, it's really over $1 million. So that's how this gets done. So we gave her the money on Monday. 90 days later, the bank paid us off because they finally got everything together. It's an example of some of the, there's small companies like pizzerias, there's bank-owned companies or very good bank customers, and some public. We do about 16 public companies, all for the same reason of speed with the cash.
That's a great example because I think when you initially said a factor rate of 1.35,
Yes.
so 35%, people would say, why, why would anyone do that? But putting it in perspective that the cost of capital, on, let's just say 100,000 was $135,000 in that example, but they would be missing out on over $1 million by not doing that. It's all relative. If you look at it from a big picture perspective.
Yes, absolutely. Absolutely.
MC Lampshire, the creator of the Cashflow Ninja and Cashflow Coach at Producers Wealth, where we help our clients integrate infinite banking with their business and investments. To learn how you can create your own banking system to turbocharge your investments and business in 30 days or less, go to yourownbankingsystem.com. That's yourownbankingsystem.com.
What are some, if you can maybe give us another example and just tell us and walk us through the steps of this entire process.
Sure. So a good example is that we'd like to do more and more of this, is a franchise. Franchises, they're sold by territory, and maybe a guy's got his first 3 franchises are in a territory, and he has a chance to buy the next territory for $150,000. What we can do, first of all, is we get our business mostly by call centers. We have 3 regional call centers, New York, Philadelphia, and Florida, and we have about 200 people on the phones. So we raise our customer, or we contact our customers primarily by outgoing calls, and we do that by getting lists of people that have applied for financing or looking for financing, maybe turned down or whatever. And obviously franchises work very well for this. So we had a guy that had 3 UPS locations, wanted to buy another location, needed about $150,000. But we were able to look at the cash flow of his 3 current locations, which was substantial. Actually what happened is he ended up buying 2 different regions because we were able to boost that up based on the flow that we saw coming through his checking account on a monthly basis. We were able to increase the size of what he was looking for and get him a $200,000 advance. He then took that, paid us back, again, from the cash flow. This is the money flowing through his checking account. We were paid back in about 70 days. And then he came back in immediately because he wanted to build or actually fit out 2 more UPS locations. And the bottom line of that is that when you do that, the money cycles, the money comes back to us very quickly because we don't bill customers. We charge it directly out of their checking account every business day. So it comes back to us quickly. Our challenge is to put it back out into good advances. But for him, once it's paid off, there's no equity lost in his business, and he's right back in saying, okay, this is great, it's worked out well. Now I want to build 2 more UPS locations in strip centers. There's no real estate. I need $150,000 for each one, and we do that. Interesting point though, we do diligence. Our diligence though is very much on the internet. It's very much about background checks. It's about customer comments, Yelp. The part that's very banker-like and hard money-like is that we go to every location and take pictures and interview the CEO. Now, how do we do that in 2 days? We use a national appraisal company, and one of the 3 of us in the company will interview the CEO. And what we're looking for there is their commitment to the business. What we're not looking for is, we don't want to hear that this is one of 4 businesses they have, and we want to know that he and his personal values, his personal net worth, et cetera, are behind the business. And as long as they're in it and in it to stay, business location is good. It's a very viable business because there's obviously fraud situations in this. We move ahead, and we move ahead quickly, and in 2 days, the money's there.
How does the repayment work for business owners?
Good question. So if you disperse a loan today to a company, tomorrow morning we will charge your checking account for 1/100th of that loan amount plus our fee. So say it's a $100,000 loan, or it's an advance. It's not really a loan. We'll charge 1/100th of $135,000 tomorrow and the next day and the next day after that until we go out 6 or 7 months and we're paid off entirely. For us, in terms of risk and looking at loans and payments, at about 70 days, we have all our money back. So once we get to 70 days, if we have some issues that come up after that, or we have to slow down, someone's run into a downturn, we're flexible on the payments because we have to try to do the best we can, but we're also looking out for the business. And if we strangle them because we are lightly secured, we're going to shoot ourselves in the foot. So we will work with them and work well. But that's basically how the repayment works. And that's why we have over 65% of the companies come back in, not because it's like payroll, like payday lending where they're stuck in. It's that the project is done and now they've got another one to move into, which is very successful.
Right. And some of our listeners and viewers might think, how big is this marketplace? Because we listed a couple of specific companies. And I mean, this is a perfect fit, obviously, for small and medium-sized businesses. Maybe you just want to speak to the size of the market that you're solving the problem for, because just from my research, I was kind of blown away.
You know, it's interesting. That's a very good question, and everybody would want to know the answer to that. But so there's a couple of parts. So Morgan Stanley has tried to evaluate this business because there's an awful lot of participants. There's smaller companies, even smaller, a lot smaller than we are, that are in it. But the estimate is that there will be about $50 to $75 billion done in this business this year. Another way to assess this is that some of the biggest guys in the country are now in this business. So On Deck Capital was started as a merchant cash company, but they have expanded. They do a lot of different types of loans. They have had, I think, somewhat mixed results in terms of being public. And they had a relationship with JP Morgan Chase, which speaks to the fact that this segment of the market is something that the banks want to participate in, but they don't put it on their own balance sheet. Other players, though, PayPal is in this. Amazon does over $11 billion a year in this business. Square is in the business. And we see increasing number of finance and fintech companies that are doing this. The other piece of this that I think is important, well, it's not important, but this is very interesting. I've watched Shark Tank like many people from the very beginning, and the 7 original sharks, every one of them has one of these businesses. They are all in it, including Cabbage, On Deck, right down the line.
Yep.
So it's a very rapidly growing business, but I have to tell you something that's surprising, and that is 15 years ago, it didn't exist. It really grew after the 2008 recession, where the banks had really pulled back. They never went back into the small business market the way they had been in it previously. And this type of niche lending is what grew out of that. Maybe it was done by friends and family before, maybe it was credit cards, but now it's a very viable piece of the market. And most of the financial institutions, insurance companies, banks, et cetera, are putting this in some part of their portfolio.
Yeah, I was blown away when I did my research too, and I came across the sharks too. That they're all in this. Mr. Wonderful, Barbara, they're all very, very much involved in this industry, and there's a lot of other big players, like you just mentioned, coming into it. Because maybe we'll talk, if you could share a little bit from an investor standpoint, what that looks like and the benefits to an investor. And some of the ways that investors can get involved in this industry. Sure.
So the way that we do this, and we're pretty typical in the industry, is that we finance 100% of our entire portfolio, our entire backing of the portfolio that we have out there, is accredited investors. We sell secured notes. Our notes are secured by all the assets of the company, all of the loans that are outstanding. And we have approximately right now in our company, we have about 250 investors. They hold notes anywhere from 100,000 up to several million. And the rates that we pay on those are 10 to 16%. The fluctuation in the rate is based on whether it's 1 year, 2 year, or 3 year that the note is for. and it's for amounts whether the amount is $100,000 or above $750,000. So at $750,000 for 3 years, that's where the 16% comes in.
My friend Brian Page has created a cash flow machine generating over $100,000 in 6 months without owning any real estate. His system consists out of renting properties from property owners and renting them out on Airbnb. His system is so simplistic, it can be managed by virtual assistants and yet so effective and powerful that it predictably generates cash flow every month. Brian and I are hosting a webinar where he shares his system and how it generated over $100,000 in 6 months for him personally. You can access this life-changing webinar at cashflowninja.com/BNB. This is one of the greatest cash flow opportunities I've seen since I've started my podcast. Again, the URL is cashflowninja.com/BNB. What are some of the risks, Bill, of this for investors, and how do you manage and mitigate risks in this niche?
Yeah, well, first of all, so you would say that this is a I would call it lightly secured. Yes, we in fact do take the receivables of the company. We will take other collateral, but most of the reason they're talking to us is that they're not people that can go into a bank, partly because the bank is not interested in lending in this business, or they don't have that comfort level. That they can do it at a 1% loss ratio. The opportunity for investors really has to do with looking at what the company's done. It's got to have a long track record. As I said, we've been at this for 8 years, and we have never missed a payment to any of our investors in those 8 years every month. But how does that really work? The real deal here is the underwriting, and the underwriting in our case is, how we assess the company, how we did the diligence that we do, the reputation of the company in the marketplace are all pieces that we work on very diligently. But then the underwriting is that, as I said earlier, is that if you're going to pay us 35% for this money, how are you going to make that back? And what is it about what you're doing with it that's going to allow that to happen? So that's really that's really the key to underwriting. But the risk profile is important in that, first of all, this is very short term. So when you talk about people that there might be an economic downturn. There could be illness. There's divorce. It's the same thing that every banker has run into when they're doing a 3, 4, 5-year loan. Those risks are there, but they are significantly mitigated by the fact that this is in 6 months, we're in cash. So when I talk to investors, invariably they say, what happens if there's another 2008 recession? Very good question, should always be asked. The unusual part about our business is that in 6 months, our $30 million could be in cash. So the biggest risk I explain to investors is that if we can't find good deals to do, the most important lesson we have learned is you do nothing. You sit on the cash. And believe me, when the cash is piling up at $5, $6, $7 million in your checking account, it's not terribly comfortable, but it is the single most important part of our business, that you never put something out because you feel a pressure to put the cash out. The answer to that would be that you call up the investors and say, look, we've paid you the rate of interest that we promised you, but we can't find good loans. And rather than take a risk that we don't want and you don't want, we'll give you your money back. That has never happened. And we're very pleased about that, but that's one of the major risks. The other is that you're not investing in a note. You're investing in our company. We have right now about between 550 and 600 notes outstanding. You have a small piece of every one of those notes. So our track record, which is from the beginning, since the beginning of our company, our loss experience is 3%. It's 3% or less. So it's very important to have a large number of notes in order to make sure that the loss is covered. Our margin is also significant. We're obviously at 35%. Our loss experience would not be a problem if it goes up to 10, 12, 15, 16, 18, 20%. But I'll tell you, in our mind, it would be terribly difficult. And first thing we would do is look at where do we make a mistake? What's wrong? Shall we start this? Shall we stop this? Which industry shall we stay away from? So we're doing that all the time and watching it closely in order to protect our investors' money, but we can still put it out and we still do that. So those are a couple of the major mitigants, but the biggest thing I would say honestly is that you want to have a small piece of a whole lot of notes. The losses, by the way, are all ours. Our investors have always been repaid for the last 8 years. We continue to do that. But it's based on the fact that we're getting larger. Our underwriting has not faltered at all, and we're looking at expansion. As I mentioned, our company has about 30 million on the street right now, but my partner, who has been in the business longer than I have, has close to 400 million. We do deals together. We buy with smaller parts of his deals. We participate with his deals. And when he's doing $1 million deal, we may take $200,000 piece of it. So we have a couple of unique pieces that make us a little different than other people in the industry. But the track record is excellent, and the profit margin is strong, which is exactly what your investors want to hear, because they're assured that their interest comes out first. We get whatever is left over in the end after losses, et cetera.
Yeah, absolutely. So. In this niche, folks, obviously on a smaller scale can invest directly into certain deals. And then there's the fund model. Am I correct by explaining it that way?
Yes. So we actually run a fund.
Yeah.
We run a fund. It encompasses the entire portfolio. There are some, especially on the real estate side, you may be familiar with people that buy and sell notes.
Yeah.
That's not something that we do. I don't think it's a good way to do it here, especially if because you don't have the collateral of real estate behind it. So I think that in this particular risk category or risk profile, having a lien on every note in the portfolio is a way to be the safest and the best way to go. That's why we've done it that way, and we don't sell individual notes.
Gotcha. And another thing that I also just want to mention is because within the fund model, you get to invest and have a small piece of a bunch of notes, as you mentioned, that could be in many different industries too, which is, that's a positive too, instead of just being specifically invested in, for example, one industry, right? So it's more, how can I say, that's another risk mitigation factor.
Yeah, really good point, and one that I had left out. But yeah, we deal with about 26 different industries, and we deal it all across the United States. So diversification in terms of industry, diversification in terms of geography are also real key factors, aside from the fact that you have a small piece of a large number of notes. But that's very important in terms of the performance and protecting the investors.
Yeah, I'm just thinking when I was looking into this, why would someone choose the fund model versus the individual ones, right? So I had all these questions kind of in my mind, and it makes sense from a risk management standpoint. And if there is, like you mentioned, a potential, another downturn or recession and so forth, that if you're heavily vested just in one deal that's in one industry, obviously you're leaving yourself up to a lot more risk and exposure to risk.
That's absolutely, and so we recommend it this way. Our customers, have had great success. As I said, we've got several hundred investors in the portfolio. Obviously, we've had a number of notes that have matured, and we have only had less than 10 out of those several hundred that have taken their money back out. Everyone else has re-upped to stay in, so they like it. They get comfortable with it. And they see the way it operates, which is very important. When the money, we try to send the money to the bank accounts of each of the investors on the exact same date that they invested. So if their date is the 15th, unless it falls on a weekend, you can expect that you'll see the money in there. It's wired. It's not sent through the mail. And that performance is something that gives you credibility and builds comfort among the investors. That's why it grows.
Yeah. Absolutely. Fascinating niche. Very, very interesting stuff. Life settlement investments have allowed financial and banking institutions to not only buy their equity contractually, but also diversify their capital from any economic, market, and geopolitical risk. It's been part of the billion-dollar blueprint followed by institutional investors. And if you're an accredited investor, you can also now participate in this vehicle with enormous growth potential. You can watch an informational webinar presented by one of the premier organizations providing life settlement investments, Penumbra Solutions, at cashflowninja.com/life settlements. Bill, one habit I've observed from wealthy and successful people is that they're always learning, they're always studying. What are you currently studying and learning?
Well, I appreciate that. So I had a lesson just the other day, because obviously I'm working constantly on the loan side, the underwriting side, making sure we're managing this properly and talking to the investors. One of the things that I missed almost completely is that the investor said to me, Bill, I don't think you understand what you're doing for us. And I said, well, I'm giving you a good investment. He said, no. He said, my son is a world-ranked ski racer right now, all over the world. I said, wow. And he said, he just got a full scholarship to the University of Denver, which I didn't know about, but that's the top ski racing team in the United States, apparently. He said, that kid would not have even had a chance to do any of this without me investing this money in the company. And I think one of the things that's important is to realize the benefit, not the day-to-day numbers that as a banker I've done for a long time. But when you can do a deal for somebody, and maybe it's a deal that's a little tougher, or you believe in the family a little bit or whatever, it comes back many, many times over. But when and I got to tell you, from somebody that's dealing with money and making loans to people, or in this case to businesses, they never forget. And it's one of the most heartwarming and the best parts about you really feel like you're on the right side of things when you're doing this. Secondly, I think even as this business has grown and it's obviously become successful and worked well, it's to really look at the details. Do not ever forget, the nuts and bolts of what you're doing, and to, get going too fast or start to delegate it. Keep an eye on all of those small pieces in terms of what's happening. And the last is the opposite. Keep a look at the big picture. Where do you see things going? Where do you see things changing? When you see people like Amazon and PayPal that are coming into this industry, that's a great thing. It speaks to the industry and the credibility, but what can you learn from them? What can you learn about how they do business? And MC, that's one of the reasons I'm talking to you today, is that I have raised money through friends and family, friends at the golf courses, country clubs, people that had invested in the banks that I had built, that kind of thing. But it's, you need to look at the new stuff, at the current stuff, at the way to spread the word. And, I'm learning that part. I'm hoping to learn that part, I should say.
Yeah, no, absolutely. Always learning. Now, a core message in our show is to leave our families, communities, and the world better than we found it by passing down a mindset, values, and principles to future generations, not just money. So, Bill, if you cannot pass on any money to future generations, and we're only allowed to pass on 3 principles to them to build wealth and achieve happiness and success, what would they be?
I would say, constantly look at the people that are successful and where you're hoping to go, and don't be shy about meeting them, trying to meet them, etc. Never lose sight of your principles in terms of what you believe in, whether it's spiritual, whether it's your daily habits or whatever. And the last is that if there's a problem with someone and you have to take one on the chin, absolutely look for your long-term reputation, take a loss on somebody, give them their money back. We've had people that have had financial problems in the middle of it, give them their money back. They will never forget it. And that's worked well.
Absolutely. Where can listeners and viewers learn more about you and your company and the services that you guys offer?
Okay. Our website is capitalsource2000.com. But I will tell you that it's not. You can't search it. You have to just put that directly in the URL in
the browser.
Proper search browser. Yes.
Yeah.
So it's a small website. But I also, please email me at wbromley at capitalsource2000.com. Cell phone is 610-291-7722. And I'll be glad to send you private placement information, PowerPoint presentation, and would welcome the opportunity to talk to you or talk to a group. I'm certainly willing to travel all over the country because it's a tremendous opportunity, and for people that are just getting into it, I have a long list of investors that they're welcome to talk to about their experience.
Fantastic. Well, Bill, thank you so much for coming on the show and sharing your journey and your knowledge and providing so much value to my listeners. It's been a pleasure meeting you, and thank you so much for coming on the show.
MC, thanks a lot. It's great. I love what you're doing.
This presentation is for educational and informational purposes only. The information being presented and considered does not consider your particular financial objectives or situation, and it does not make personalized recommendations. This material is not intended to replace the advice of a qualified tax and legal advisor or other qualified professionals, and you should not use the information in place of a customized consultation with a licensed professional regarding your specific personal financial objectives, situation, and needs. We believe the information provided is reliable, but we do not guarantee its accuracy, timeliness, or completeness.